Hey everyone, this is Ryan Mallory for SharePlanner.com. So we're crossing 1700 today, right? We're at 1706. The market's continuing to climb as we head it closer to the final hour of trading. You can see here just on the upper left-hand corner using pivot points that we're at the R2. Beyond that, we could even see R3 today. I doubt it, but it's definitely a possibility. Up 20 points. We haven't seen this kind of a move since July 12th or July 11th, excuse me. So biggest day by far. We're not even outside the upper Bollinger Bands. They have contracted, which is a little disappointing, but mainly that's due to the significant amount of consolidation we've been doing since the last time we had a big move. Um, and the other thing too that we have seen that we saw last month was where the markets, for the most part, have been rallying in the first 2 weeks of the month and then selling off the second 2 weeks, or in the case of July, like consolidating. June, the whole month of June, we sold off outside of like the last week or so. But May, you can see here, we rise up, rise up, rise up, and then for the second half of the month, we go back down. April, yeah, we saw a little bit of a pop in April, and then a subsequent sell off, and then a little bit of a rise. So April's probably not a really good test for that, but May and July we've seen that, and the only reason why I bring that up, I don't think twice is a good sample. But back in 2010, we were seeing a lot of that, where the market would rise first 2 weeks of the month and then sell off the second 2 weeks. More so like towards the latter parts of 2010, second half of 2010. So that's just something to keep in the back of your mind. I don't think it really is something to worry too much about, but uh, another thing I think we should talk about, though, is the fact that we're crossing 1700, because last time we crossed 1700 or across a big milestone like that for the first time was obviously 1600. And when we crossed that 1600, we did it in a very decisive manner as well. If you remember here back on May 3rd, we popped a good chunk of and then we just kept on going up, 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 up. So I'm about like 80% capitalized right now, and I'm pretty happy with that. I like to see what we do tomorrow before adding another position. But this is a possible scenario where I could, go full 100% long in this market, which I don't get to. I usually don't use up all my capital. Usually, I always have some cash laying aside, but this could be a great opportunity. Just like when we crossed that 1600 level, everybody thought, man, in short order we could be at 1700, and we got all the way up to like 1686 before we actually saw a significant pullback. So there's a part of me that's wondering, okay, are we going to see that same kind of push to where we're going to be in maybe about a month's time say, hey, we're going to hit 1800? I don't think we will. I think before we hit 1800, we'll see another pullback at least of what we saw back in June, because it just doesn't, it's not like a frog where you're just going to hop from, lily pad to lily pad, or from 1500 to 1600 to 1700 to 1800, and not face any resistance in the meantime as a result of that. So I think we're crossing 1700 today. That's a huge milestone. But you got to remember, back in May, people thought when it was May 22nd, people were thinking, oh, we're going to hit 1700 possibly just after hitting 1600. So keep some perspective on this market. We're not going to 1800 anytime soon, but I think we can make a nice run in the 1700s, maybe up to 1740, 1750, 1760, and then see some kind of a pullback from there. But no, keep what I'm telling you here in mind, because the markets tend to act in patterns, and that was what we saw last time. The market at 1600. Obviously, the Fed's not getting out of the way of this market yet. It's only continuing to print money, print money, print money, and not doing anything to step away. And so once they do that, or until they stop doing that, there's really no reason to get caught up in earnings and all that stuff. Trade technicals, and the market's not going to pull back or have a significant sell-off until the Fed stops printing. So until that happens, and that's really all this market's based on right now, the Fed. You find the individual trade setups that allow you to profit from this macro event taking place by the Fed, and you should be in good hands and always manage risk. So I had a lot of people question me on ARNA today. Why the heck did I put this as a as a stock to short. I'm not shorting it actually. I'm just, I'm giving chart analysis throughout the day like I always do. ARNA was one that popped up. Let's get rid of these Bollinger Bands. But I'm not going to always be right on stocks, and I may very well be wrong on ARNA. I don't know. But look at this consolidation. Okay, so for more than a year here, ARNA has been consolidating, and then we break it in early July. We're pushing through, and we're breaking it at a time when the market's going up in the beginning of July. And it doesn't do too much thereafter. After it goes from 17.18 down to 6.69, and then just consolidates there. Well, yesterday and today it tested the underside of this previous consolidation pattern that it had been in, and it sells off today. So that's a really and it's selling off today when the market is shooting up. Now I know they reported earnings. I don't get into their earnings stuff. I really don't care. The only thing I care about with earnings is that I'm not holding a stock that's reporting earnings. So once their reporting is done and over with, then it's fair game for me to get back in or to initiate a new position or whatever. But I do not hold through earnings. So ARNA, I mean, look at this. I mean, while my thesis may end up being proven wrong, why would you not want to act on this? If you're looking for a short position, and I'm not in the market for looking for a short position, I think there's better opportunities to the long side right now. But if you're bearish on this market, ARNA would be a great stock to get short on. I mean, here you got no clear support until you get down to about 550, okay? If it can break that 550, then you got this huge gap right here that could take the sucker down to 390. So I'm not, despite people, blocking me on Twitter and stuff like that because I don't like a particular stock that they're long on, deal with it. I mean, charts are charts, and you can't get so emotional into a stock that somebody has a different opinion is going to get you all upset. I had somebody today, by the way, I'm long on Google from like the 80s, and it's trading at $903. Somebody posts on Twitter, that I know, and says, oh, I'm going to buy some puts, on Google to see if it can come back down. Now, I'm not going to come back and call these people, dirtbag and all that stuff and tell them how wrong they are, because I don't really care if they buy puts. Their ability to win or lose has no correlation to my own ability to profit from this market. And if they're right and I'm wrong, who cares? I go to the next trade and sleep like a baby at night. But some people, they're so prideful about their trading. Their sense of self-worth is embodied in what these stocks do. These 3, 4, 5-letter symbols. That's what they're that's what they're attached to, and you can't be like that when it comes to the stock market. If you're wrong, you get out. I mean, in ARNA, I have a stop loss. Why? Because I think that it could actually go against me, and I could be proven wrong at the end of the day, and this is not a stock that's going down. So if that's the case, then I want to get out at 727, right above this consolidation level here. So if I'm wrong, I get out. If I'm right, I keep it staying in, and I book profit where the charts tell me to do so. In any case, I guess the message, I wanted to talk about the market crossing 1700, and then also to just don't let this market control your emotions, and dictate your actions. Because if you do, if you're emotional because the market did something that you didn't like, you're probably spending or you're trading with way too much money, and you don't want to trade like that. Don't be emotional in your trading that someone's opposite opinion bothers you. Trade above that. Trade above the fact that you might lose on a trade. Trade above the fact that you might win on the trade. Don't spike the ball in the end zone. All those little cliches that I like to throw around. That's going to be it for today. So if you guys have any questions, feel free to hit me up at ryan@sharepointer.com. All the best to you guys, and God bless.